how to invest in real estate for passive income, you're gonna love this video. There is not a better investment strategy that has helped provide more people with financial independence than real estate. Once you understand how real estate can take and put money in the bank month after month, you're gonna be addicted to it. More people have become independently successful financially through real estate than really anything out there. I'm gonna make a statement. I have always regretted selling a property 5 years later. The more you can hoard and keep, the better off you are. Period, end of story. You've got to get yourself in that situation. So in this video, I'm gonna show you exactly how that works for you, so you can see exactly how that works for you and your family. Stick around to the end. I'm gonna walk you A to Z. I got a little bonus for you, especially you beginners out there. I'm gonna show you how to make this happen. First of all, you gotta ask yourself, if I wanna become a real estate investor, then what does a real estate investor act like? You know, what do they read? What do they listen to? You're watching this and that's a good start. But I mean, seriously, you've got to educate yourself on this. I mean, you know, short of taking a real estate class, which I don't recommend doing that, or going and getting a degree in real estate, finance, that's just a different level. You're just talking about you and your family buying some rental income so you can provide a financial independence for you and your family. It works every time if you stick to the method. Now, going out there, if you're a first-time buyer, you can buy a duplex. I always recommend this for first-time home buyers. Buy a 2, 3, or 4 unit property, and there's a FHA program for first-time home buyers where you only have to put 3% down as of this recording. And they got really favorable rates on this. The reason I'm doing this is because you only have to live there for 1 year. So if I'm buying a duplex, I fix up one of the properties that I'm in because I don't mind the dust and the dirt, right? Clean it all up, get it all spick and span. Whoop, put that other person in that property, start cleaning up this one. Once you have both of those properties perfect, now you can increase the rents, rent out both of them, and it's gonna cash flow. Okay, say, well, what do you mean it's gonna cash flow? How do I know it's gonna cash flow? Because we're not gonna do the deal unless it does. Okay, this isn't about figuring out what that deal is. I just think that's the best way for a beginning and novice investor to start. Get a multifamily property, which means 4 units or less. With this FHA program, 3% down, are you kidding me? It's a great entry point to make that happen. Once you've done that, now you can move on to other properties, okay? So then you can go in and move into another property. I've seen this with couples all the time. So now they move into a piece of garbage. They don't care, just move into a piece of garbage. I mean, there's cockroaches, they don't care, whatever, okay? They go in there, they fix that property up, and they maybe stay there for 2 years. There's a couple of things you can do. As long as you're in a property for 24 months, not in a row, of a 5-year window, you can consider that your own property. So after 5 years, you can sell that without paying any capital gains taxes on $500,000 or less as of this recording. So I've seen a lot of younger couples where they go in, they fix up a property, make it nice. Now they get $250,000 when they sell it profit, tax-free. They do another one, they do another one. Pretty soon they have $1 million, $1.5 million over a 5 or 6 year window or more, whatever the case, depending on the value of the properties, and they've never paid any taxes on it. I mean, why somebody wouldn't do that with that? It wasn't around when I was younger. So this is a great way to make that happen. So you get $500,000 in tax-free profits every year. Please, yeah, I'll do that. Meanwhile, you're doing some stuff in your retirement also. But, okay, some of the things you need to be careful, and I mean this in a good way, is you have to start understanding how the financial system works with banks and properties and what have you. If you start going to the conventional, ho-hum, Wells Fargo, stuff like that, you're gonna be limited because every time you buy a property, I buy the first property, you gotta qualify. I keep this one and I want to get an investment property. Now I have to show enough money for 6 months of payments on this house, 6 months payments on this house. Okay, that's fine. Now a third one, now they're gonna want 6 months payment in the bank on this one, and this one. You see where it's going on that? This is where the private sector has got in real. You might pay a little more in interest on it, but it's not gonna be on your financial statement. And after you've done 1 or 2 of these deals, you don't even qualify, the property does. As long as the property meets the criteria of what they're looking for, so they feel safe with lending you the money, you can start your little empire going from there. Those are the things that you want to do. You also want to look at the tax ramifications. It's beautiful. So if I'm buying properties, all of a sudden everything I do becomes a tax deduction. I'm looking at properties, write the mileage off. I need my cell phone to talk to the renters. You can write part of your cell phone off. So you're running a business. Please, please, please find a CPA or a tax planner, I should say, that understands real estate tax deductions and how those works. It's imperative you do that. Now, the other thing you want to do while you're figuring all this out, join some real estate clubs out there locally and start getting familiar with the language. Don't be embarrassed if you don't know what it is right now. Just watching some videos on it, you're going to know more than most people. But you got to get away from the screen and get out there and actually start doing some things, okay? For instance, there's my world. I buy delinquent properties all day long, okay? So what do I mean by that? When a property fails to pay their property taxes for 1 year or more, the county government is obligated by law, state statute, to bring those tax delinquent properties up for sale, and you can buy the lien on the property. If it's late longer than 4 years, they can actually sell the property outright. You heard me. So I go to auctions and I put up money, maybe $50,000, $60,000, and I'll buy a $300,000, $400,000 piece of property and own it free and clear. Or here's another good entry point. I don't have $50,000, Sean. Okay, then find some fully improved lots out there. I've got a student right now, okay, that's all they're doing is looking at lots. I said, why are you doing lots? He goes, because there's no house on it, there's no tenants on it, it's a low entry point. I'm buying these lots for $4,000 and $5,000. I'm turning around and selling for $15,000 and $20,000. I'm like, not a bad way to go. But again, real estate is made when you purchase the property. What I mean by that is, if I'm purchasing the property here and it's worth here, I've already made money going in. There's nothing else out there like that. I want you to think about that. I can buy a property, like I just said, for $100,000, $50,000, whatever the case, that's worth $200,000 or $300,000. I've got that equity right now. Please show me something that's legal that you can do that. It doesn't exist. Okay, so there's those aspects right now. So there's that. Now, in order to understand fully how tax lien and tax deeds work, you got to understand the principle behind it. The county needs this money. Okay, this isn't somebody trying to kick somebody out of a house. No, this is for schools. 65 to 55% thereabouts of property taxes go towards schools. Then you've got law enforcement, fire departments, roads, bridges, all of those things that keep our counties going. This is the only way counties get the money. I mean, I want you to think about it. If the counties didn't have a mechanism to charge interest rates or be able to secure the property after some long period of time, no one would pay their property taxes. And there are countries out there that don't have these rules, and you can see what happens. Their infrastructure in shambles. Nobody pays their property taxes on time. There is no consequence for that. And because we have such a strong system in here, it really makes a great way to make it happen. Now, there's a lot of information on that to make a lot of money. And here's my gift to you. This is free. All you have to do is go down to the link down below. Go to higginsmethod.com. Click on that link. I got a brand new course that I will give you for free. Okay, also another super bonus. If you register right now, okay, I have a book on America's Best Kept Secrets, a booklet I'll send out to you, my copy to you, my gift to you, and we'll get that done right away and get that out to you. This is Saen Higgins saying God bless, good luck, and thank you for tuning in.